Ladies and gentlemen, when I say the word athletic footwear, what is the first company that comes to mind? It's Nike. Nike is the brand for athletic footwear and athletes in general. I mean, when I go over running, what shoes do I grab? I grab my Nikes. So anyway, in this video, I'm going to discuss Nike's current position, their stock crash after their earnings report, and then I'm going to cap it off with my DCF valuation. I'm going to tell you exactly what I think Nike is worth in 12 months. So before we get started with that, Shy Mouse says, thank you so much to my 1,000 subscribers. It took us a while to get here, but we're here, and I wanted to thank personally each and every one of you. You are all amazing. So let's continue. So yeah, what's the main thing about Nike? What is Nike? Obviously, they make athletic shoes and other apparel materials. But what makes them special? What makes them special is their sponsorships. This is what separates them from other companies, from other athletic footwear companies. I mean, what do you think of when you think of Michael Jordan? You think of basketball, and you think of Nike, Air Jordans. Here's one of his ads right here. And what does he have? You have Serena Williams, Tiger Woods. These are all sponsors for Nike. LeBron James. I mean, just Kevin Durant. I mean, and this is one of the advertisements for Nike. Nike is the brand. I mean, when you go out for a run, what do? What shoes do you grab? So anyway, and they're excellent at advertising. Air Jordan has landed. This is one of the first commercials, one of the first advertising spots for the Air Jordan line at Nike, the Nike Airline. So yeah, they're just huge. Nike is an enormous company and become legendary. They're fantastic at marketing. Bar none, they are probably the best marketing company out there. That's why everybody knows them, and they are worldwide. They're world renowned for their marketing and their shoes. Marketing, shoes, athletic, Nike. So anyway, what do we have here? Nike stock has plummeted to near COVID lows. Look at that pandemic low in 2020. And look where it is today at $74-ish per share. It has plummeted. I mean, the high is $175 per share. So it's gone it's chopped more than it in half. Why? So let's discuss that. So anyway, Nike CEO blames remote work for innovation slowdown, saying it's hard to build disruptive products in Zoom. So what's going on here? This is actually after their most recent quarterly earnings results. I'm going to go over that more in a second. Let's just say that Nike cut their projections for this year to negative mid-single digits. So what does the CEO say? So the CEO is John Donahoe, and he blames remote work for the company's innovation slowdown and dearth of fresh products. Donahoe said the Nike employees worked from home for 2.5 years, and it's really hard to do bold, disruptive innovation to develop a boldly disruptive shoe on Zoom. Sounds fair. Honestly, I think it took Nike too long to realize that. 2.5 years? That's just too long to realize a problem. So that's the downside. It took him too long to realize that was the issue. The good thing is they've been correcting it for the last 18 months. It got fixed 18 months ago. The company is in a bit of a rough spot and has been criticized for falling behind on innovation and ceding market share to upstarts like On Running and Hoka. So anyway, what does he have to say? It was actually an interview on CNBC. So yeah, what's been missing is the kind of bold, disruptive innovation that Nike's known for, and when we look back, the reasons are fairly straightforward, he says. In hindsight, it turns out it's hard to do bold, disruptive innovation to develop a boldly disruptive shoe on Zoom. Our teams came back together 18 months ago in person, and we recognized this. So we realigned our company, and over the last year, we've been ruthlessly focused on rebuilding our disruptive innovation pipeline along with our iterative innovation pipeline. So Dono said Nike's innovative pipeline is as strong as ever, and consumers can expect to start seeing new product drops each season, as well as the fresh storytelling the brand has long been known for. See, the thing is, Nike went a couple of seasons without new shoes for that season. They missed out on a couple of seasons. This is one of the reasons for their revenues declining and for their brand to sort of diminish for the last couple of years. So they really need to get new shoes each season. It's an execution issue. They need new shoes each season, every season. And they need, brand new stylings, brand new everything. Everything. So anyway, what are we going on here? Everything we said. So in December, Nike announced a broad restructuring plan to reduce costs by about $2 billion over the next 3 years. It also cut its sales guidance as it warned of softer demand in the quarters ahead. 2 months later, it said it was shedding 2% of its workforce, more than 1,500 jobs, so it can reinvest in its growth areas such as running, the women's category, and the Jordan brand. Speaking of Michael Jordan, Donahoe insisted Friday that Nike is gaining share and remains a dominant force in running and all things sport. And yada, yada, yada. Let's move on. Okay, so what are the headwinds for Nike? What are the things that are slowing it down and cause this crash in its stock price and its earnings report? Number one is the innovation pipeline post-COVID, which we just discussed. Number two is actually the lifestyle slowdown. Lifestyle had been doing well, but in the last year it slowed down. You have micro and China issues. See, the world's going through a slowdown. I call it a recession. And Nike obviously is not recession proof, being a high-end shoe seller. And then also a digital sales slowdown. Nike Digital has slowed down in the last year due to slower traffic on their websites. So they're feeling effects of the global macroeconomy, which it's temporary. It is temporary. So I think Nike is primed for a rebound. Let's continue. So on their conference call, just a couple notes I took down. They're listing fiscal 2025, that's this year, as a transition year. They're focusing on increasing speed to consumer, an improved innovation cycle, and their focus is on their performance line of products. They're sort of refocusing back on their strongest segment, which is performance. Running, things like that. So, is Nike fool's gold or are they real gold? Let's discuss. So anyway, this was pulled from Y Charts. This is actually Nike's last 10 years revenue quarterly growth. You can see it's average about 7.38%. You can see the crash in the pandemic and then the spike afterwards. But overall, it's averaged about 7.38% per year. And currently it's at negative 1.7%. So they have some work to do to get back up to their average. So that's the down part, that's why the stock's cratered. As a result, also their PE has also cratered to 19.78, which is below their historical average of 37.72. So Nike's market cap is $109 billion, trailing PE of 19.49, forward PE of 22.73, price per sales of 2.17. So what happened? What happened on Nike's most recent quarterly earnings report? The revenues are actually flat year over year. I'm looking actually at the yearly numbers. The 12 months ended 5/31/2024 and 5/31/2023. So you can see revenues were flat. However, gross profit increased 3%. So they're actually becoming more efficient, which is good. Efficiency is improving, and you can also see that the net income is up 12%. That's partially due to a lower effective tax rate, which saved them about $131 million right here. But even before that, their income before taxes will increase from $6.2 billion to $6.7 billion. So they are operating more efficiently. That's why their net income is going up. What they're doing with that money, it's coming back to us. So anyway, the revenue estimate so these are the analyst estimates. Analyst estimates for this year are revenue to decline from $51.3 billion last year to $48.9 billion this year, and then to rebound to increase 4.8% next year. But I think they'll do better in 2026 than analysts have pegged them for, due to innovation pipeline that we mentioned earlier. So where does Nike spend their money? Primarily, sure, they give it back to you. Share buybacks and dividends. Dividends have been increasing steadily, and share buybacks are fantastic as well, growing north of $1 billion per quarter. Now, what does Wall Street think? Wall Street rates Nike a buy at an average price target of $92.70. Now, I'm going to dig into my DCF analysis on Nike. Now, it took me a while to put this together. I haven't really done a DCF on an apparel company before, so it took a little bit more research than usual. So what is a DCF? A DCF is a discount cash flow. It's a model that basically says all of your future free cash flow discounted to your present value is what your company is worth. It's a valuation metric on the company. And that's calculated using a discount rate. So what am I assuming? Okay, this is my bare assumption for Nike. My bare assumption for Nike is 2020. These are fiscal years. 2025, which is what we're currently in. Nike said that they're declining mid-single digit decline this year. So I put that in as negative 5%. I'm predicting a rebound next year in 2026 of 10%, and then gradually declining growth to 4% by 2034. This gives us, this chart here. And for the multiple valuation, that gives us a multiple valuation of 16.77 at an implied stock price of $80.22. Okay, so on that bear model, this is basically if Nike just treads water. If Nike just treads water, I think they're basically fairly priced at $79.42. However, if Nike becomes a growth company again, if they can rebound, if they can make a comeback, I predict that Nike is worth $92.21 per share today. But I'm going to list it as my 12-month price target for Nike on my optimistic model is $92.21. So yeah, don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.